A very happy new year as you join us on today's episode of Tax Matters. This is our second outing in the year 2014, but it is still appropriate to wish you a happy new year. It is our prayer that it will bring peace into your homes and prosperity to your business. With me on the episode is Christina Pius.
Happy New Year and welcome to Tax Matters.
On today's episode of the program, we will be continuing our review of what came to you on the program in the year 2013. This is the fourth in the series and the second this year. We begin with excerpts from episode 32, which was brought to you in the middle of August 2013. Mr. A.S. Yamawe was our guest on that episode. When, as a taxpayer, you file your tax returns, when you forward your audited accounts to the tax authorities for tax purposes, how do they react? What do they do with those returns?
We have a risk profiling template where you key in data from audited accounts that are filed. Okay? But I ask myself, these audited accounts that we are keying into the template, are they correct in the first instance? I've seen a situation where a taxpayer reports 15 million, for example, when he should be reporting 300 million. What will that template do for me? So, for me, the risk here is not in the audited accounts. The risk is in establishing in the first instance whether the returns are right. So how do I do that? I go to industry analysis. I look at what, if you take a supermarket, for example, like a busy supermarket, I can go there pretending to be a buyer, and I'll see traffic over 1 week, 2 weeks, and I'll compare and see what I'm seeing in the returns. I go to a petrol station and I notice that the traffic coming in every week, they have a tanker of fuel, 33,000 liters, worth about 3.5 million. And I know that every week he gets at least one tanker. In a year, he gets 55 trucks, multiplied by 3.5 million. What do you get? And I look at the returns, I'm seeing 10 million, and I'll say, hey, it doesn't tie. So for me, it goes beyond the risk profiling template in the office. I need to have interface talking about partnership with stakeholders. I need to go to an NPC and say, can you give me a report of all your distribution for January to maybe December last year, 2 years ago?
So you do all this? And
I use that to form an idea of what I should be expecting from manufacturing, from supermarket business, from shopping plaza, from petrol stations, from manufacturing.
Early in year 2013, a new department came into being at the FRS, GBTD, Government Business Tax Department. What does the GBTD do? That question was answered on episode 34, broadcast in August 2013.
On Wednesday, the 21st of August 2013, the Government Business Tax Department of the FRS put together a sensitization workshop on the activities of the department for ministries, departments and agencies in the North Central Zone and the Federal Capital Territory. What does the Government Business Tax Department of the FRS do?
It's born out of the segmentation efforts of the SAP, recognizing the taxpayers in their respective sectors. We realize that the government business is one big business that needed special focus. Unlike in the past, when a lot of liabilities will remain unpaid, they are promptly being attended to now. They are always there at the end of every month, ensuring that they remit the taxes due to government so that we avoid the building up of arrears. And they are also using the opportunity to clear the backlog of arrears, because we are talking to them, we are asking them to reconcile, see what had existed before their time.
What we are doing as a department is to focus on peculiar ways we can get things better done with MDAs. You see, the old arrangements where payments of MDAs were lumped with companies and individuals was not getting us the best, because these are peculiar sectors and each one needs like a customized initiative.
Mr. S.S. Ogungbeson, at that time the coordinating director overseeing the activities of the government business tax department, made some remarks which succinctly conveyed the raison d'etat for the workshop.
Let me explain and emphasize here. The treatment for VAT is not the same as for withholding taxes. So if you say MDAs are required to deduct, yes, they will deduct withholding taxes and payee from incomes. So with respect to withholding taxes, yes, it's your duty to deduct from the contract fee of contractors who are the taxpayers. And the reason why you are deducting is we do not know whether that company that is doing business with you will ultimately report that income in full to the FRS. So the moment you deduct and you remit to us, you've given us information on him. And you are also helping us holding back a certain portion of his income. When at the end of the day, the man files return with Inland Revenue, if the tax he has paid is more than what you have deducted is more than what you should pay, we'll give him his refund. But you have given us a link to that company. That is your duty.
That is one leg of the deal. The other leg is with regard to personal income tax.
With respect to payee, that again is agency responsibility to help deduct tax in accordance with the law on the income and by your employees. So that is where the deduction responsibility begins and ends. The treatment for VAT is different. You are the consumer, and value-added tax is consumer-oriented. It is the consumer who pays it, not the contractor. The contractor will pay VAT on his own consumptions. When he makes purchases, he will pay. And the law says the consumer is also an agent. Which, as far as VAT is concerned, he is an agent. He is not the one that should bear the burden of VAT. So whatever he has paid up front, he has a right to collect it back because he's not the target. It is the final consumer that will ultimately bear the brunt of value-added tax. So when he's working for you, assuming you ask him to supply vehicles, where he's purchasing the vehicles, he has paid VAT. He didn't come to you. He paid VAT from his own pocket. Yet, he's not the consumer. The final consumer is the MDA. When he now submits his invoice to you, he will reflect VAT. And we are now saying to you as agent, you should deduct that VAT that you should be paying. But then, if we take VAT from you, and we have also taken from the supplier, government has taken VAT twice. We have a duty to refund one. But we don't want you to do that adjustment. Let's do it ourselves. The MDA is the final consumer. He is the one to pay VAT.
Yeah, okay. Yeah, waiting be this.
The deduction now for withholding tax.
Withholding guinea. Look, if you not pay me my correct money today, hey, Munu get me half for.
But madam, should be your company paying income tax.
Yes, that one I enough load for me to carry. Why in I won't come add join them again?
You see, withholding tax now advance payment for income tax. So when you do some kind job like contract, we go remove small from them when we won't pay you.
I don't go contract am up. No. I bet tell me another.
No. We must pay the money to FIRS within 30 days, and they go give us withholding tax credit note to take show say you don't pay part of your income tax in advance.
So
now to help make the money where you go pay at the end of the year small.
So this withholding tax something, it be like part payment of no.
Exactly, madam.
I beg you. Give me my check.
Remember, come collect your credit note.
Withholding tax, now for we own good. FIRS, it pays to pay your tax.
And from the Oga Patapata, the acting executive chairman of the FIRS.
I was talking to the organizer that I have not seen the banks because MDS remit money to banks. Some of the banks fail to remit for one reason or the other. Lack of schedule, lack of tin, and so on. That's one. You talk of the responsibility of the MDAs. What is the responsibility of Federal Revenue Service? Sometimes I receive complaints from contractors that they have suffered withholding tax deduction. They have gone to our offices, they cannot get credit notes. So what are we doing to address that? Then MDS too, you have mentioned it, that they should please not award contracts without tin, because it's creating a lot of problem. You award the contract, you deduct, you remit to banks, but the bank cannot pass it to inland revenue because there is no tin. Or you remit the money without schedule. You just send it envelope, say you have remitted, taxpayers will come back to you. Where is our credit note?
And to some other matters arising.
Sometimes the government says it embarks on direct labor. And this direct labor runs into millions. And at the same time, you find it difficult to deduct. When your staff come for staff audit, they discover these vouchers in millions. And they are jobs. Two, some contractors do insist that they pay taxes. They pay their own taxes. So, if you want to now deduct from the job you are doing given to them, if not for the explanation that the chairman gave, it's always difficult to tell them that, look, you must deduct VAT from the job he is doing. My issue is this: do we insist on deducting, then he reconciles with your office, as you have rightly said, or what do we do? I'm talking about the VAT, yes. Because the contractors will insist that they have been paying their own taxes. If you want to deduct from the job you are giving them, the rest are them.
When you call an outsider and say, go and repair this thing for us, that fellow is not a staff of the ministry. Once you engage an outsider, you may not have awarded a formal contract to him. You merely say, go to our account and collect 2 million and help us patch that road. That is contract. That is contract. It is a verbal contract, but it is a contract. You must deduct withholding taxes because that man is earning income. He must pay withholding taxes. You are the consumer of the service is rendering. You must add 5% VAT on that amount and to be paid by the MDA. It could be painful, but that is the law. But if you call the director PRS in the MDA, director, see, we need to do this service here and there. Go and collect some amount, as if you give him cash advance. Is a staff of your ministry. That could also be spent on direct labor. But you cannot deduct withholding taxes from him. He must come back and account for that money to you. Otherwise, you hold it against him. Now, because if the Inland Revenue says you must deduct withholding taxes, what is he going to do with that credit note? Is it to reduce his personal income tax? No. And you can also not use it. So withholding taxes does not arise. Now, for value added tax, when it takes the 1 million from your chest and it goes to the market, where he's purchasing cement, they will charge VAT from him. I will not advise you to impose VAT on the amount you are giving to your staff because it's an internal thing. Now let me tell you, Where we are holding you back is if you award or you give an amount that is more than amount prescribed in the financial rules to an individual, we will report you to EFCC. The EFCC is going around now to hotels to find out if there's any agency that is releasing cash direct to the officers to come and deal with them. Because the rule now is that you must issue check direct to the hotels. So please, let's understand it. There's no direct labor. It's your coinage. You are the one defining direct labor the way you have explained it. Once you give money to somebody outside your organization to work for you, it is contract you are awarding. And that is the rule.
And on episode 35, we told you the story of the formal investiture of Mr. Mark Anthony Dike of the FRS as the 11th president of the Chartered Institute of Taxation of Nigeria, CITN.
The very much awaited formal investiture of the 11th CITN president, Mr. Mark Anthony Chidiolu Dike, has finally taken place.
The one they call Prof.
Yes, and it did take place on Friday, 30th August at the Oriental Hotel in Lekki, Lagos. It was a day full of pomp and pageantry with gaily dressed men and women, council members of the CITN, past president led by the first president, Chief Ajibola David Olonleke, royal personages, a delegation of the Chartered Institute of Taxation Ghana, and many more.
Welcome back. We are still on a review of what transpired on this program in the year 2013. We do trust that you are all tax-paying citizens, good corporate citizens of Nigeria. But just in case we have a few tax dodgers around, what should they expect from the tax authorities? What really are the powers of the Federal Inland Revenue Service? I mean, when you talk about this enforcement, whether you are slapping people on the wrist or not, what really are your powers under the various tax laws?
We have wide powers. For example, we can go for search and seizure if you refuse to, file your returns, and we suspect that you are evading taxes. We could storm your place of business and take the books there and even arrest. We have the law says we can co-opt any policeman from anywhere in Nigeria to assist us in enforcing the law. The law also gives us power to also appoint whoever is owing you. We call it the power of substitution, the power to appoint agent. If you know whoever is owing you or holding your money, we can write to that person to appoint that person as your agent for the collection of that money you are owing to the revenue. And that person is bound to pay that money to revenue. If he doesn't pay it, then he becomes liable to the debt. We also, we also have the power to distrain all the movable properties of the taxpayer without a court order.
I was going to that.
Without a court order. Then if you want to distrain the fixed asset, that is the movable ones, like property and land, then you need a court order, warrant of distraint. So we have so much powers on that. We'll try, and even prosecution. The law says if you are supposed to deduct a tax, and you fail to deduct it, if you can prove that you are the one who made it not to be deducted, you can be held personally liable, and the jail term is 3 years.
What do you think?
Obey the law, do the right thing at the right time,
and all will be well. You collect companies income tax, you collect value added tax, you collect petroleum profit tax, and a few others, capital gains tax and all that. If you take maybe companies income tax, for example, what are the penalties for the different offenses?
The law says every company, the company must register within 6 months of incorporation.
Okay.
Not to file a return, but just register, get a TIN.
Okay.
Then if you don't register, the following day after the 6th month, you are liable to penalty for non-registration.
25,000 naira.
The first month.
Okay.
Then subsequent months, 5,000 naira per month. So if it takes so much long time, you are going to penalize.
Okay.
So many of us register companies are put in their briefcases. Then after 2 years, you want to do business and you blame the revenue. But that's the law. Yes.
Okay, that's penalty one. What about now? You also said earlier that within 18 months, okay, by 18th month, I should file returns. If I don't file returns, what are the penalties?
Also, if you don't file returns, that's what you call late return penalty. Late return penalty. Also, that is 20,000 naira for the first month of default, and subsequently also 5,000 naira.
Okay.
Yes, for late return penalty. The other penalty is for non-payment on due date. You know, you are supposed to pay today, and if you don't pay, the FOSITA, company income tax, is 10% of the amount you fail to pay on due date.
That's penalty.
Yes, unless we give you an extension. And even at that, we are still working on trying to see how we can even understand. But then the law says you must penalize. So that's another penalty that goes with it. And if for VAT also, for non-filing, and I remember VAT is monthly, value added tax is monthly return filing. For non-filing also, every month of default also, you also be penalized for every month of default.
How much?
5,000 naira.
Oh, that's why people will now call us and say they went to the tax office, they want to do so, and they have slapped them with these so fines. So these are legal fines.
Yeah, that's the law. Right there. Yeah. Previously it was not much, 2,500 naira, 500 naira per month. So the people didn't bother. But today it's a lot. Okay. And the more you delay, the more liable, the more they want to. So,
you also have interests.
Yeah, interest. Yes, interest is on non-payment because government is not a bank or credit institution. So if you are holding back government money, you are liable to pay the cost of that funds. So the law also gives us power to collect interest on the amount which you have not remitted or you have not paid.
Let's go back to registration because today you have told us that it's very important that 6 months after incorporation, I must register as a taxpayer. That's not even paying now. I mean, I must register. What does it take to register? When I come forward to register, what do you need from me?
In fact, that's where we have done a great job. We have eased off registration formalities. Today, you need about 4 or 5 data: name of the company, the RC number, the address, you know, a phone number of the. And within 30 minutes, somebody said, 30 minutes you can get your TIN. Yes, you can get your TIN. You know, and we're even working on online registration, so you don't have to come to FRS office. You stay here, enter into the place and do it.
Okay, so I get a taxpayer identification number. Yes, okay.
Now,
sorry, madam. I know say for my name.
I don't check in no day. After all my wahala, these people still no register me.
Haba, I put on 14.
Guinea. Wetin concern tin tomato for inside this matter wey we dey talk now?
Eva, explain for am 14.
Madam, taxpayers identification number TIN, a special number for all correct taxpayers. E dey compulsory if you wan register and do business with government.
Without TIN, you no go fit do business.
Abeg, na how much I go pay to collect this thing?
Madam, I get am 14 free.
Madam, take your certificate of incorporation to FIRS office, fill the form, and you go get am one time.
Just like that? Abeg, make I go collect my own.
TIN na free o, na for everybody. Na your correct identity. FIRS, it pays to pay your tax.
Another aspect of that process is when I have now become a taxpayer. Tax clearance certificate is very popular now. They ask for it at the embassy. They ask for it when you want to register a vehicle. They all sorts of places. Tax clearance certificate, like we asked you for TIN, for registration as a taxpayer. When do I qualify for tax clearance certificate?
Well, it's immediately you register your new business. You can get it within 1 week because you're a new business. But it's only when you now start their business that we need to make sure that you pay all your obligations before you get a tax clearance. Because the name is tax clearance certificate. You need to clear that you have no liability with us. So that's basically that. But the first one, you have it. And if you have not commenced business, that's what they call POL, pre-operational levy, which you pay 20,000 every year, and they give you a tax clearance.
Okay.
If you have not commenced business.
Okay.
But make sure you've not commenced business. Most of my friends will say they've not commenced business, but every year they come for tax clearance. Then what are you doing with the tax clearance if you have not commenced business?
It's still searching.
Well, then you have commenced because you are searching. You have commenced business. So if you do it once, twice, say, hey, file state of affairs. Let me know that Because with that, I can do certain checks to check out that, yes, indeed, we are saying the right thing.
POL, what's that?
Pre-operational levy.
How much is that?
20,000.
Then you give me tax clearance certificate.
Yes.
But that tax clearance certificate will not contain any tax paid because you have not paid any tax. Yes. So if you collect that one without any money on it, and you now go to a ministry or department or agency, and you are claiming that you constructed the Tomiland Bridge, you built the Ajogun house in Abuja, they will look at your TCC and see that you have not been paying anything. So you are qualified for it, but don't use it to go and be claiming heaven and earth. A word they say is enough for the wise. It's on that note that we draw the curtains on today's episode of Tax Matters. This will be the final in the series of reviews of what transpired on the program in the year 2013. We thank you for watching, and we do wish you a blessed week ahead and a prosperous 2014. From Christina.
Thank you for watching. Bye for now.
Bye for now.